Is Executive Chairman at GCP Global, Gabriel Yap, joins me in the studio here. Welcome, Gabriel. So, what happens to Noble now? Is the company going to be better off without Yusuf Ali Reza? Because he's certainly done a lot, at least to try and address the issues that Iceberg, fleshed out over a year ago.
Well, certainly Mr. Yusuf actually helped turn the company around. In the latest set of results, the working capital has actually improved to 4.4 billion. That's up almost $1 billion. The gearing basically has actually come down by 1.7 billion, about 3.69 billion right now. But the key thing going forward is that there's actually a huge conundrum or a black box among institutional investors on the stock. For example, their late reaction towards valuation issues pertaining, for example, to Gloucester Coal, which was an old issue. But nonetheless, Merck in the minds of many institutional investors would be that if you're looking at this existing businesses, which is basically this gas businesses as well as mining businesses, are there also other black box valuations, surprises, lingering around? That's the first issue. The second issue is that, yes, they've done much better with respect to their balance sheet, but is it sufficient going forward now that the credit ratings have actually de-rated them?
And that brings me to this next question, because Fitch Ratings was very behind the curve when it came to, of course, downgrading the company's, ratings, and it's the last one to do so. Does that mean that perhaps potentially that we've reached the bottom here for Noble?
I think things are actually improving on the operation side. The fact that they have made very clear that their goal going forward is to sell off assets to help raise the profile of their working capital is definitely a plus going forward. Now, the big conundrum right now is that how long would investors, sitting on the sideline, be able to sit by and wait for the company to really improve and deliver finally on its words before they come back, in a flock? Because really, summer basically is coming to pass.
Well, you mentioned the big black box in there that institutional investors are very worried about, and obviously that's played out in the capital markets, looking at the equity price, which is substantially below book value, and also its debt is trading well below par. Do you think that both have found a floor here?
I think there's a very high possibility that Noble has very limited downside from the current levels, simply because of the fact that its balance sheet is finally improving, even though it's coming out from junk status. Its share price basically have really collapsed. Among the former STI component stocks, probably one of the ones that's been bashed the most. So if you're looking for a high risk, high gain kind of environment, to operate in, this would be one of the stocks that maybe hedge fund managers may be looking at.
Okay, well, you've got to have a gut of steel, don't you?
Indeed.
All right, Gabriel, thanks very much for your insights on that. That was Gabriel Yap, Chairman of GCP Global, in the studio with me. All right, let's move on and talk about some business news in brief on this Monday.